Webull stock has been on a wild ride this week. After a breakout performance where it surged over 27%, the past few trading sessions have seen the stock pull back, dip, recover slightly, and then retreat again. It's been anything but boring, and if you're watching this company closely, you'll know this is about more than just price action. There's a bigger story unfolding here. So, what exactly happened to Webull this week? On Monday, the stock tumbled more than 11%, closing the day at around $12.74. That drop came right after the company announced a $1 billion standby equity purchase agreement with Yorkville Advisors. And if you're wondering, yeah, the words equity deal tend to make investors nervous. Because even if a company isn't diluting shares right away, the possibility of dilution in the future often triggers a sell-off. That's exactly what happened here. But let's not get stuck in the headlines. Because the market doesn't move in a vacuum, and this dip didn't come out of nowhere. What's interesting is that before Monday's drop, Webull had been absolutely on fire. The company posted fantastic quarterly earnings, 32% year-over-year revenue growth, a swing from a net loss to a nearly $13 million profit, and rising customer assets that now total over $12.6 billion. Their registered user base also jumped to over 24 million. That's not a flash in the pan, that's a fintech company starting to flex some serious muscle. And here's the kicker, that $1 billion equity deal? It's not a panic move. It's a strategic funding tool. It gives Webull the option to raise capital over the next 3 years, as needed, on their terms. That kind of flexibility is valuable, especially for a company that's clearly growing and exploring new markets. So yes, Monday's drop was real. But it wasn't necessarily a signal that the party's over. In fact, some investors saw it as a buying opportunity. On Tuesday, the stock bounced back modestly, gaining almost 1%. And then Wednesday brought a stronger move, up around 3%, closing at $13.23. That seemed to reflect a shift in sentiment, a quiet confidence returning to the trade. But then came Thursday, and the stock dipped again, about 3%, closing at $12.81. That kind of choppy action isn't unusual after a high volatility week. What it tells us is that the market is still digesting the implications of that equity agreement. Investors are weighing the risk of future dilution against the upside of Webull's access to major growth capital. And here's where it gets even more interesting. While the short-term price moves have been volatile, there's been no change to the core fundamentals that pushed Webull higher in the first place. This is still a company with strong earnings momentum, a growing user base, and a bold new expansion into crypto, through a partnership with Coinbase, no less. That crypto push has started in Brazil, but it's clear Webull is thinking globally. This is what makes the current moment so compelling. You have a company that's profitable, growing fast, and entering the crypto arena at a time when digital assets are starting to regain their shine. But the market is still trying to decide whether to reward that or fear it. And let's talk about those long-term projections. In the comments lately, I've seen a lot of retail investors tossing around price targets, some saying $20 is around the corner, others even throwing out $30 or $50 as a medium-term goal. At first glance, that might seem over the top. But when you start looking at the numbers, the case becomes more realistic than you might expect. If Webull maintains even modest revenue growth, stays profitable, and uses its billion-dollar funding tool wisely, it's not hard to justify a higher valuation. Especially if they expand internationally, tighten up their crypto offerings, and continue to position themselves as a credible alternative to platforms like Robinhood and Sophie. What's more, the market loves a good fintech story. But it loves a profitable fintech story even more. Now, is this a guaranteed moonshot? No. Webull will need to prove that it can scale without losing its edge. It will need to show that the crypto relaunch is more than just a feature, that it can actually drive user engagement and revenue. And yes, they'll need to be smart about how they use the standby equity agreement. Too much dilution too fast, and the market could punish them. But right now, they have optionality. They have growth. They have momentum. So what we're seeing with the stock this week, it's volatility, yes. But it's also attention. Investors are watching Webull closely. There's anticipation in the air. And that's often when the most interesting moves happen. The stock market isn't just about numbers, it's about narratives. And right now, the Webull story is still unfolding. There's tension between the bulls and the bears. And that makes it a stock to watch. So where do we go from here? If you're bullish, you probably see this week's price action as growing pains. A temporary pullback as the market recalibrates. Maybe even a consolidation before the next leg up. If you're cautious, you might be waiting to see if dilution starts to creep in, or if competition heats up. But if you're long-term minded, and you believe in fintech, crypto integration, and global retail investing platforms, Webull is worth your attention. Let me know what you think in the comments. Are we headed to 20, 30, 50? Or are we just seeing another overhyped fintech trade? Thanks for watching, and if you found this video helpful, make sure to like, subscribe, and stay tuned for more updates on Webull, fintech stocks, and the evolving world of retail investing.